My name is Victor Corro. I will be the host today. Welcome to this webinar where we will be talking about how this pandemic has been affecting members of credit unions with actually a fintech company. And I'd like to present to you today Ben Morales, who is the CEO of QCash.
Thanks, Victor. A little bit about myself. So my name is Ben Morales. I'm CEO of QCash Financial. We're a QSO that launched in 2015 to bring to market a digital small dollar lending platform that originated many years ago with our parent company, Washington State Employees Credit Union. And so with that, we're going to go ahead and kind of jump right into it. All right. So again, a little bit about us is we started in 2015 as a way to commercialize our digital small dollar lending solution that was created at WSECU 15 years ago. And so we commercialized the solution because the board of directors at WSECU really felt that this was an opportunity, a solution in which credit unions could also share with their members to pull them back from predatory lenders to be able to create more financial stability for them. And so we did that. So we're really about being a purpose-driven fintech and being able to deliver solutions that help credit unions create overall financial health and well-being for their members. And our small dollar lending platform is our pilot solution that we've entered the market with, but we are developing more solutions as we see the need and credit unions want to focus on supporting member financial health. So let's go on to the next screen. So a little bit about us. So in summary, here are the numbers. So we have, actually, this is a little dated. We have 19 clients, actually 20 now, signed throughout the US and Canada that are totaling 28 billion plus in assets. These credit unions are allowing the opportunity for about 2.2 million members to have the opportunity to have instant access to short-term credit. And so we cover across 12 states and 2 provinces. And probably mostly is that we are able to address state and federal compliance regulations, and we've delivered over 500,000 loans on our platform. So really tested in delivering this type of product. So when we think about the journey that we're on, right, when we looked at how small dollar loan and short-term credit really supports members in bridging the gap when there's more month than money left, what we really understand is that there is this journey that we're on, right, on how do we create more financial health leading to financial well-being. Well, we look at it as it's a journey, it's a hike that we're on. And how do we support members on their journey to improve financial well-being? And it begins at that base camp, and we call that base camp really our borrow stage. This is our borrow camp. When we can provide broad access to short-term credit instantly to be able to help members bridge the gap, then they get to some level of stability by which to be able to address other financial situations, whether that's saving more, spending less, beginning to plan their financial futures, and ultimately achieving the peak of financial well-being. So we look at it as a journey, and we really begin at the borrow stage. So this is what we're going to talk about today. We do have other products entering the market that will support those other camps, if you will, but more to come on that later. And so next screen. So what problem are we trying to solve, right? When we think about small dollar short-term credit, there are many situations. So I'm just going to talk about a few of them today, just to give you a sense. It's going to be nothing new. At least I hope it's not new, but things that you've heard before. And I want to emphasize that you know this, but the question that we have to ask ourselves is, do we really understand the problem we're doing about it? Is really when we talk about member financial health and how it continues to hold back members, we see these statistics all the time about Americans unable to come up with $400 emergency funds, the student debt that's going on out there, and how the increasing use of just general debt as well. And then the inability to save for retirement. I mean, these are things that are in the headlines that we see every year. This is not new, but they continue to come back. And so we really need to start taking a look at this and how do we solve this in the long run to create, get members on a path to stability. Next screen. And so when we think about the one portion of stability that we're talking about is about the borrow, providing broad access to credit, there are many use cases. And these use cases I'm gonna repeat now, were really originally, the research was done by the Financial Health Network, who's done extensive research in this area about what creates financial health and the different products and services that are needed out there. And so these are some situations where that occur in members' everyday lives, whether it's exceeding the income, their inability to manage spending, to misalign cash flow. As we know, there's a gig economy out there. There's hourly workers, tip earners that can't guarantee how many hours they're going to get. So their cash flow becomes very unstable. And so these create use cases by which they need that instant liquidity to bridge the gap. Moving on to the unexpected expense, I call that life happens, right? Every day life happens to members, and whether that's a car breakdown, a kid breaks their arm, a dog needs to go to the vet, I need to go to a funeral. Those are things that happen that impact members and are quick surges in cash that they need to address those needs. And because of our inability to save, they require a solution to bridge the gap as well. And then just general planned pure purchases. You know, there are things that people want and need, and small dollar loans can help solve those needs to without disrupting any other major savings plans that they have. And we've seen that in the data. So again, when we started this 15 years ago at WSECU, we've collected the data around how members are using the product, what their performance is, and what the profile is. So what we can do is substantiate the research that the Financial Health Network has done relative to the use cases. So there's definitely a need in the marketplace. Victor, next.
I have a question about this short-term lending use cases. Out of all these things that you have mentioned here, where do you think the consumers are in the United States right now? Which one out of this four that you're presenting here you see being the most common cause?
You know, it's really those middle two, you know, that cause the major problem. So the misaligned cash flow is really about, you know, the economic wage earner and how much they're getting paid. Do they get paid a living wage, if you will? And where they become susceptible is when they have gaps in those in that income. And then because we don't save as a society in general, the unexpected expense that happens, you know, any disruption, any bump in cash flow or cash need will create that opportunity for a small dollar loan. So we see those two middle ones as probably your two trigger points that members try to solve.
Okay, thank you.
Awesome. So the other is, you know, is being able to service the credit invisible and or the credit challenged, right? So current methodologies really that determine credit levels are typically designed by the credit score. Well, one of the things you're going to know about our platform before this webinar is over is that our platform doesn't use credit score, because if you think about who really needs short-term credit and small dollar loans, is those that probably are the most credit challenged, and maybe the credit invisible millennials and or those that have thick files. Our relationship-based underwriting platform allows for that and gives members value for their loyalty and experience with the credit unions. Next screen, Victor. So when you think about what we're up against as an industry, comes from the Center for Responsible Lending. And these are rates that are being charged by predatory lenders across the US. Nobody's immune, because a lot of times members can gain access through online methods as well. So this is the alternative that is being provided to our members if members don't have access to a small dollar loan credit product by you. And so we think this is an opportunity for us to solve as an industry.
I see that many states, and obviously Coopera is located in Iowa, and actually I work remotely from Wisconsin. I see a great disparity between the two states, but if I look into the Midwest, I see Minnesota at 200%, Wisconsin, where I'm at, 574%. So it varies greatly regionally.
It does. And, the regulators in each state obviously trying to address it. The CFPB tried to address it initially with Cordray. And we, as QCash Financial, work closely with the CFPB in discussing how their regulations were going to come out. But we see that states are now trying to solve it in different ways. And there's always seems to be a loophole. and states are trying to do the right thing, but it's not top priority. So really what's going to drive down rates in the entire market is competition. Competition will drive the predatory lenders to lower their costs to a point that it's likely to be unsustainable for them as they need those high rates to survive. So I'd say that if we want to change this outlook, it's about creating competition. So if we move on to talk about how the small dollar loan helps meet member needs. So when we look at our solution, so I'm going to talk a little bit about it, spend a little bit of time on the screen. It's really about how does it integrate into your brand in any channel that you would like using our platform. So it's fully integrated behind the pin on your online and mobile, and can be integrated into the teller functionality should you want to service members through the branch. It's fully brandable user experience, and you can customize the text in any way you want to do. And so it's multi-language, so we can do Spanish. Some of our clients do implement Spanish, but we can do French and any other language that you would want to implement in the platform. We have access to it through a single sign-on or through a REST API, depending on how much you want to get into delivering the experience. It's certainly your choice. Probably most beneficial here, and we learned this through our journey of delivering over 500,000 loans, is really being able to get it down to where there's no people involved in the origination, underwriting, or funding. So we have been able to, over the years, really create a solution that can fully fund a loan to the deposit account in about 6 clicks in about 60 seconds, fully funded to the account. And we do that because of the highly integrated platform that we have. It is a cloud-based solution, very minimal. There is no on-premise technology, if you will. And so we do that because over the years, we've built a relationship-based underwriting decision engine that does not use a credit score to underwrite members. What we do is pull in data relative to the relationship and experience they have with you into our engine that we've learned over the years. And we weight those based on what we recommend and what you decide. Ultimately, the credit union gets to decide what the parameters are. And then we begin to underwrite these loans. So we pull out the cost of the credit score. We have direct access to the core to pull the data in real time to be able to immediately underwrite and fund these things. So you could literally be in a grocery store line, realize you don't have enough money to cover, do a small dollar loan, get those funds deposited in your account, and then put your debit card into the point of sale machine and be able to pay for groceries and move on. So it's that quick. And we'll talk a little bit later about why that's important. And so this is the solution in general. Yes, Victor.
I have a comment or a question here, and it seems like this is very well thought out, and congratulations for coming up with something so needed in the financial space. But usually, obviously, we are a consulting firm as well, and at first, we go about trying to explain the solution to the C-suite at a credit union. And usually, launching a new banking product may seem time intensive or labor intensive. and it's hard to envision sometimes that many institutions are able to move quickly. Can you delve a little bit more into how this is a quick solution, and there's fewer pain points for credit unions if they want to adopt it?
Yeah. So there's a couple of pain points that occur throughout the product, but it really begins at the senior management level, at the credit union philosophy level, at the board level. Around this idea is, do we want to pull our members back from predatory lending? Do we want to support our community and minimize the impact that these institutions create on our communities? And if that answer is yes, and you have alignment there, then things tend to go much faster. So if we can solve that philosophical approach of why we would want to do small dollar short-term credit, and that we want to really, really help members get to this stability and financial well-being stage, then you've solved a big challenge in getting this thing efficiently implemented. The second is that small dollar short-term credit lending really hasn't been done by credit unions in a very, very long time. We do that probably one-off and do a few of them, maybe a month, but getting back into this and being a source requires you to address it in a programmatic way, so that you're managing it based on the goals and objectives that you have, the risk you want to take, and making sure it's sustainable and achieving the margins that are necessary to keep it available to members. So we help you with that. So we have a program coordinators that work with the credit unions teams to make sure it's delivering on the objectives for why you were doing this. And probably lastly is, where we run into some of the most challenges is around integrated into the third-party technologies like online banking, mobile banking, and some of the teller platforms, because those tend to be long queue times to get implemented. But during this time of COVID, we have worked with a number of core banking technology providers as well as third parties to get them to align with us on how do we get COVID-related solutions that benefit credit union members and credit unions implemented faster and quicker. And so we've aligned with a number of those that are on board with us. And so on our website, you can get some more information around how do we solve this integration issue that happens. But from a project perspective on the credit union side, it's very, very minimal. We've got to, agree to do it philosophically, create the product, test it, and deploy. It's not highly complex at all. It's not a major IT project. I'll say that.
Okay, that usually is a pain point for credit unions.
I understand. So when we think about, the platform, it is completely personalized and configured by the credit union and how they want to deliver the loans into their market. And they can be in several markets. We have credit unions that are in probably 20 plus states that need loans defined for them differently. And so it allows for that. You can configure rates, fees, terms, and the level of risk that you want to take. So ultimately, it's your loan. And so we've designed it so that credit unions can make these loans how they want and for their members, and what they want to charge them and what level of sustainability they want to create out of it. So completely personalized to you. Next slide. And so when we think about the loan configuration options, we've really started at the very beginning when we were trying to compete with the predatory lenders in the marketplace. And they offered two products: the single pay, product where there's one payment due at the end of 2 months, or the amortized, which is a traditional installment loan product. But then, they begin to evolve, and so have our clients' needs began to evolve. Where someone said, "Well, I want to do an open-end product with the platform," and then our clients just began to ask about how do we innovate. I want to apply that 6-click, 60-second product to other things that I want to do, like credit card lending, like loan recaptures. So we developed a pre-approval engine that really leverages credit unions' need to deliver other products through our platform and do it in a very efficient way. Again, not needing any people to help support. So we like to think about what we're doing is giving credit unions a small dollar loan platform, but it's also a platform for innovation to help solve other loan distribution needs that you may have. And so it's very flexible. Next screen. And so a little bit more discussion about the relationship-based risk, and there's no credit score decision. So we learned early on that if we used credit score, we were going to be excluding a segment of the membership that needed these products the most. And so we felt that, you know, a relationship-based approach really captured a much broader set of diversity of members and created more inclusion in granting credit. So it really, I think, allowed us to fit a gap that we weren't serving before, and really based on loyalty. And what we discovered during the last downturn that we had is members were paying back the credit union before they would pay back other debts that they had. We tried to understand that and build that into our engine to leverage that. So as far as I know, our solution is one of the only solutions that's actually delivering relationship-based underwriting, no credit score decisioning, to actually giving out loans and doing it successfully. And so we take in transactional history, we take in historical experience with making payments, cash flow, relationships of other products, and other custom attributes, because every member has custom attributes with their credit union. So we pull those in through our core integration to deliver a loan that is responsible, that is at a lower cost, and is able to achieve a margin that keeps it sustainable. And that's our relationship-based model that's probably core to our platform.
I have a question or comment here, and this is where we intersect. Obviously, we both work very deeply in the credit union industry, and the credit union industry it's all about inclusiveness. You know, there's been a push in the last couple of years on diversity, equity, and inclusion, and this is frankly why I thought it would be a good idea for us to talk. And you know, this is exactly one of the things that I see that really works well in inclusivity, especially when consumers that are trying to boost their credit score. It's hard for them if a credit union or a bank or a financial institution it's pulling a hard request on their credit. It may be going down. So this relationship-based underwriting, it's a really interesting concept to us. And then you mentioned that you haven't seen this done or replicated elsewhere.
Yeah, no, well, let's think about it. It's a risk, right? If, you know, when we, so where we really obtained the direction was from the board at WSECU, and they observed that, hey, members are paying us back during this time, and we need to give them grace and give them value for membership. And if they're paying us back, then let's give them another loan. And so that was kind of the mandate of make that a core part of what we do. And so that started there with a board, some board insight, and the management team took that and, you know, allocated funds and said, let's give it a shot. Early on, this product made nothing and actually probably lost money for WCCU when they were developing the program. So they invested in the belief of serving members. And rightfully so. And then after enough iteration, they found the formula. And so we're just commercializing that for them.
I'm just glad to see that, you know, there are many efforts in the credit union industry on diversity, equity, and inclusion.
So that's kind of the general product overview. Certainly would welcome any other questions that may come, Victor, that you have, that we can continue the conversation, or where I can share any more insights relative to our experiencing in doing small dollar short-term credit for a long time.
There's a question from the audience. It says, have you been able to measure impact vis-a-vis or comparing predatory loans and what you do? Is the consumer impacted positively with what you're trying to do?
Yeah, so great question. We get that all the time. And so here's what I would say. We are actively working on that right now with new clients. So and what's necessary is to actually create a method by which we can benchmark and create a long-term longitudinal survey or longitudinal type of measurement that can measure that impact. And so, meaning you have to set the baseline where you start, implement the program, and begin to measure incrementally. We haven't done that with WSECU. As you remember, this was an idea that they were just trying to iterate on and trying to solve a member problem. They weren't worried about the research. They weren't worried about, was this profitable? They wanted to solve a member problem. So they didn't build the foundation to get that level of measurement. But what we're working on with new clients today is to build that in. Is let's do a baseline and then ongoing incremental types of measurement, whether that's through the financial health measurement survey or through incrementally measuring members through the data that we have access to. So we're working on that now to get that longitudinal data to be able to prove that. And so we don't specifically, other than what we can quantify, is that the cost that our credit union clients charge compared to the market significantly different. And we can certainly demonstrate, in a 3-digit APRs offered by the predatory lending space compared to 2-digit within the credit union space. So by default, we are saving the money, but we do need to get to that research side, and we want to, because we believe that once we can tell the story, that it will be a clean and clear decision for credit unions.
Another question, do the credit unions see over time that this product helps with their bottom line, meaning, they increase their margins?
Yeah, so let's make no mistake about it, that without margin, there is no mission. And that piece of information was shared with me early on when we started this company, and I was a little bit hesitant in saying, we do have to charge for the risk we're taking. That means we don't subsidize, and we recommend that there is enough margin that you keep the product on the shelf for members in good times and in bad times like we're in today. So we can, it is profitable for our clients at the bottom line, but you do have to get comfortable with a higher interest rate, and that's sometimes a challenge for credit unions to do. But at the end of the day, if we don't provide it, who is going to? And we know who that is today.
What keeps you up at night?
Right now here's what I see happening is today we are trying to provide a ton of relief for members where credit unions are running to lower fees, to eliminate fees, to provide access to emergency loans. The government is trying to do things. And so we're trying to solve for today, which is a period of relief. We are going to be successful at providing a year for provided relief at this time. But what's the next stage that the members are going to evolve to? They move to a stage of recovery, and then ultimately on to what the new stability is going to be. So this is the journey for members, and we're just at the first one. Where credit unions will need access to short-term solutions is at the recovery and stability stage, because that's when the money will end, and that's when reality will become much harsher for our members. So let's not undo all the work that we've done to get them to past relief, by letting them go to predatory lenders. So seek out solutions that will help solve that and help prevent that. And you know, we can certainly help you, but I'd be more than happy to consult with you and give you our experience of what we have seen done and what can be done. So look out, we're on a longer road. Our members are on a longer road.
Are there any efforts on the, this is my question, on the on predatory lenders to really be more aggressive now that, you know, we're in a national pandemic or international pandemic?
Yeah, so we know that the regulatory environment, at least from the CFPB, is stepping back. They are not going to be as harsh on the predatory lenders, so that's going to open up the door for them to continue to do what they do. And during recessions, usage of these types of loans goes up, and it goes up because of the fact that they're the only major players. They're open longer hours. It's very convenient to do so. So they put, you know, from an experience perspective, they are very, very attractive. And so we do see that, but we also see where the financial institution regulators, NCUA, the FDIC, and OCC are now giving permission to the financial services industry to take this product back and offer this because they know the outcome of what's going to happen. So I would say when, you know, when there's a crisis, let's not waste a crisis and really create something positive out of it and supporting members through these times.
Are credit unions positioned better than banks to deploy a product or service like this?
It's in our DNA. This is what we do, right? We serve members' needs, and we are there for them when nobody else is. We've proved it time and time again. This is just another opportunity for us to prove that point with providing the right products and services to meet their needs during these times. So it's us. It's our game to lose, is what I would say.
That's right. And I have one last question. It's a personal one. How do you get started on in credit unions?
Boy, I was just in small at that time, Las Vegas, Nevada, and I needed to get out. I was working for a bank at a time, and I was like, gosh, I got to get out of Nevada. And someone said, hey, there's a job at this credit union in the Pacific Northwest. I'm like, I don't even know what a credit union is, but I'll take it. And so lo and behold, I fell into my purpose in life and to help people achieve financially. So it was just by happenstance, but I'm sure glad it did.
Thank you so much. Well, Ben, I wanted to acknowledge your time and you know, your willingness to share the knowledge in this you know, great example of collaboration. You know, something that would really help credit unions be inclusive. And you know, hopefully we can have a follow-up. We will put your website and you know, other information, and if folks have more questions, I'm sure that Ben will be more than willing to answer it. And you're starting to see our address and email address and contact information for doing so. And well, just wanted to thank you again for your time, and you know, until we see you next time.
All right. Thanks, Victor. Thanks, everybody. Appreciate your time today.
Take care.